All right, Rob. Is market timing stressing you out? Dollar cost averaging might be the investing strategy you need. We'll break down how it works, when it's most effective, and whether it's the right approach for you. Stay tuned.
Gary, thing number 5, dollar cost averaging. What is it, Gary?
So, Rob, dollar cost averaging sounds complicated. It's actually very simple. I want you to imagine a situation where you find a stock that you want to buy, or maybe forget a particular stock. You want to just put money in the market. Maybe you're going to buy the S&P 500 index or the Nasdaq 100 index. But you're worried that what if you're buying in at the high? Like what if you bought everything in the middle of last week, and then at the end of last week we got this huge downturn. Today was a horrible day in the market if you were long. And so that can be daunting to people. They say, how do I know what the right time is? And what if I don't have enough cash right now? So dollar cost averaging is really simple. I want you to imagine a situation where you had $1,200 to invest, but you're worried about the timing. So what you might do is invest $100 a month. And over that next year, you'd get to $1,200. Now, the advantage of dollar cost averaging is you buy more shares when the price is lower. The idea is you're not going to go buy a fixed number of shares every month. You're going to buy a fixed dollar amount. So if you would have bought, if you were buying right now, you'd be buying more shares than you would have bought a week ago. If the price goes up next month, you'll buy fewer shares, the same dollar amount. And so the idea is by buying more shares when the price is low, you can basically reduce your average cost over time. That's the idea. And you're also less, your returns are less conditional on the level of the market at a particular point.
Gary, in terms of using dollar cost averaging, I mean, what do you identify as the biggest benefits of that particular type of strategy? Who do you think that works best with, right? Or what type of investor would find dollar cost averaging most interesting?
I think dollar cost averaging is best for inexperienced investors. If you're saying, look, I know I want to put money in the market, but I don't know when to do it, and I'm worried about the timing, and I'm nervous I'm going to buy something and it's going to go down 25% or 40%. If you just don't have that level of professional expertise, buying a small amount every month actually tends to work pretty well. It's also great in a down market, so it's really good protection. Now, for clarity, it is not a guarantee of higher returns. So, for example, if imagine like Nvidia stock last year, where it just went straight up. In a situation like that, you would have been better off buying on Jan 1 and just holding it, right? So, a situation where stocks are going straight up, you're better off owning from the beginning. But the truth is, nobody gives you that information ahead of time. So it just tends to be best if you're an inexperienced investor to just put a little bit in at a time. The other thing that I would encourage people to do is if you want to invest, but you're worried you don't have the money for it, dollar cost averaging is a great way to do it. And if you don't have $100 a month, you can do $50 a month. If you don't have that, do $25 a month. Right? Just start to invest a small amount every month. If you can do it weekly, that's even better. You can do, $25 a week, whatever it is you're able to do. And if you invest like that over a long period of time, chances are you're very likely to do well. And that's why these strategies are powerful. It allows amateur investors to get started at lower dollar amounts without worrying so much about the timing. And that's why this can be effective. It's not a guarantee of better returns, but it's a whole lot better than doing nothing because you're paralyzed.
Great stuff there, Gary. And that concludes this week's version of the 5 things, wrapping up our investor education on dollar cost averaging. Again, if you have any questions for Gary, be sure to head to deepknowledgeinvesting.com, access the Ask Gary feature of our website right there in the top navigation. Send in a question of really whatever you'd like, right? We'll take one, we'll take all, whether you want to talk about investing,